All right, cool guys. Happy Saturday. Thanks for showing up. Thanks also, of course, for TradeThirsty and my good friend Jeanette for inviting me here on this Saturday. What we're going to talk about today is something that you've probably never seen before. In the sense that we're actually going to make sense of the stock market together. It's not something that's beyond human comprehension, not at all. It actually really makes a heck of a lot of sense if you have a process. And I think that's one of the big problems that I see in this industry, that a lot of people will try to become traders and investors, but really what's not being taught anywhere is process. Random indicators with buy and sell signals with no process behind it. So we're going to cure all that for you guys right now over the next, I guess we'll have an hour or so together, which is awesome. So we're going to talk about a process, right? And just to give you an idea of what this process does, for example, here's just a couple of buy and sell signals that this process gives us. It's not just a random indicator, it's a process behind the indicator. So for example, ticker symbol APA, Apache. This one literally just triggered a couple days ago. The stock gave us a sell or short signal. The stock dropped 10%. We would have made 10%, or students who took the stock trade made 10%. The options profit was 430%. We get a buy signal in CBOE, the stock, a couple days earlier. The stock made a quick 6%, options 152%. These are, as you can see, these are brand new signals. They're not just from ages ago. They literally just triggered a few days ago. Or here, and this one stock literally triggered a couple days ago, 3.4% for the stock and 67% profits in the options for those traders, options students, traders that took those signals. Just a couple of words on myself. I originally have a bit of a different background from a lot of people in this on the educational side come at. I originally come from the sell side and then also the buy side. I was an investment banker, places like JP Morgan, moved on to hedge funds and things like that. And now for the past decade, about a decade ago, started my own company, managing money, doing advisory, and also the educational side of things through the lens of how the market really works. So what that's background has allowed me to do is really give people a good idea of what some of the best traders and investors actually do to make money. It's not guessing, it's what people actually do. So I can, and that's also what we do here at the Steady Trader and Blue Oak Advisors. So what we're going to start off today is talk a little bit about something called indicator meltdown. Who in here, by show of hands, uses an indicator? Type in yes if you use an indicator in your trading. It could be a moving average, it could be an oscillator, anything like that. Yeah? Okay, getting a lot of yeses. All right, RSI, that's all good. Now, let me ask you this question. Have you ever occurred or come across a situation where your market indicators suddenly stop working without warning? Like the indicator didn't call you up the day before and say, oh, it's going to stop working. Type in ME, M-E, if that's ever happened to you. Let's say you've had 10 trades and all of a sudden you go on a massive losing streak. Who's had that before? Yeah, it stinks, right? How does that make you feel? Not very good. Now, I promise you, we're going to cure this problem with you over the next, I guess, 55 or so minutes. That's my promise. We're going to cure that problem with you guys right now. Now, logically, what follows, and again, you guys can probably relate to this, first of all, you freeze, right? Human emotion. That's what our human body, our brain is made for us to basically freeze when that happens. It's fear, and actually, believe it or not, fear and greed, both, they all kick in. These levels start to rise. And what happens in terms of your actions is you end up resolving to random guessing or maybe even prayer to the stock market gods, neither of which are really strategies that will work over time. And of course, as a result, you go on a big losing streak, right? So you guys can relate to this, right? And it stinks, doesn't it? Now, the way that most people trade in the market is they go on these, I call it basically sideways step, right? And I know Jeanette's a good dancer, so she can probably relate to this step. So you do like 5 trades in a row, and you make money, and then you have 1 or 2 losers, and it wipes up all those 5 gains. And ultimately, at the end of the year, you have nothing to show for it at best. Who can relate to that? Type in me. Yeah? Okay, so that's what we're going to get rid of this issue of indicator meltdown. curing and preventing indicator meltdown can be the first thing. Here's the agenda for today. The second thing we're going to do, we're going to go to, and I'm going to show you guys my best pattern, right? But then very importantly, we're not going to just show you the pattern. I'm going to show you what's even more important than the pattern, and that's the process, how to find this pattern. Because anyone can have a pattern or an indicator, and they're totally useless unless there's a logical process behind it, mostly taking into account how the stock market actually works, right? And then thirdly, or I guess as a fourth point, we're going to go through and we're going to show you guys our Market Rover dashboard, which will literally force you to do this process, this repeatable process, day over day, week over week, month over month, year over year, without you having to guess. So we're gonna extrapolate and basically eliminate that gambling gene that's embedded in most people, and we're gonna instill a process for you, a process that absolutely works, and I'll prove it to you here today. Sound good? You guys excited about it? Okay. All right. So first of all, what are the three major struggles for traders? Well, we've touched on one of them already, but I think one of them that a lot of people encounter is information overload. You wake up in the morning, there's headlines, there's earnings reports, there's economic data, there's this and that, there's CNBC blaring stuff out, there's emails, there's text messages. It's a lot of crazy stuff. And for most people, that's overwhelming. And it should be, because it is overwhelming. Now, the second point we already touched on, and we're going to focus on it a whole bunch more here throughout the presentation, is that most people don't have a process, right? So not only is it too much noise, but in addition to that noise, they don't have a process to kind of, process all of that noise. And thirdly, most people have too many tools, right? Most people have too many tools. Now, even if you don't have too many tools, you probably have the wrong tools, or you're using them wrong. And it's just a fact that a lot of people have sort of a situation where it looks like this. This is not actually your desktop, right? But it feels like this, right? In other words, there's crazy amounts of stuff, crazy amounts of tools and noise, and you have no way to get through it. You guys agree with that? In other words, you have no process, which means, because if you have no process, you have no perspective. And if you have no perspective, you can't ever gain confidence. And I want you to think about this. Whatever you're good at, think about whatever you're good at. Maybe you're good at a sport. Maybe you're good at accounting. Maybe you're good at cooking. Whatever you're good at, there is a clear, repeatable process that allows you to execute whatever you're doing at a high level, like at a good level, I mean, right? If you are, let's say, a good cook, right? You know exactly, like for example, if you make a sauce, I happen to dabble in cooking myself a little bit, you can't just throw stuff together. There's a logical process for most sauces, otherwise they blow up, right? If you're good at whatever, you see you're buff and you go to the gym, you don't just go in there and start ripping around weights. There's a process to it. And in trading and investing, most people unfortunately are never being taught a process. So having said that, I'm going to bring up the screen here, and this slide here is something that I'm going to repeat probably at least 10 times throughout this presentation. And this is the following. Indicators and scanners and trade alerts are only as good as the process they are used within. Let me say that again. Indicators and scanners and trade alerts are only as good as the process they are used within. Who can relate with this? Type in me if this makes sense to you. Right? Indicators and scanners and trade alerts are only as good as the process. If you are looking for a magical unicorn indicator that all you need to do in the morning is wake up out of bed, click a button, and you make money, you are delusioned and you will never ever make money in the markets. But I'm going to help you get rid of that problem because it's a gambling gene we all have, right? So you need to be a realist in the markets. If you are a gambler with a gambling mentality, you will not make money. You must have a process. Having said that, we now know that we need a process in order to cure and prevent this indicator meltdown. Let's talk about a pattern that repeats itself in the market for a very specific reason, by the way. It's not just a random pattern. It repeats itself because of human emotion. And it's a candlestick pattern. I'm going to show you guys this pattern right now and make sure you understand it before we then move on to finding a process to use this with. So who in here uses candlesticks? Type in me if you use candlesticks. Yeah? Who in here has never used candlesticks? Type in no if that's you. It doesn't matter, by the way. I'm just curious what kind of people, how familiar you guys are with candlesticks or not. Okay, so a lot of yeses, a couple no's. Very, very good. That's actually perfect. Good, good, good. Now, candlesticks are one of those things in the stock market that are allowing you to basically sidestep using 50 other indicators. And I mean that, and I'll teach you guys why. Because the way to look at candlesticks is to understand that they are telling us everything we need to know about human emotions and actually investor positioning in the markets. If you can consistently figure out what investor positioning is, you have a massive edge over the rest of the stock market operators. Okay, or whatever. It doesn't have to be a stock market, by the way. This works in any markets, commodities, currencies, anything, bond markets. Now, if you have used candlesticks before, you would probably agree with me when I say that there are too many candle patterns to learn them all. Would you guys agree with that? Right? There's funny names out there, and quite frankly, it's totally useless to have all those different candlesticks because the reality is only a few of them, very few of them, in fact, probably about 2 of them, which I'm showing you today, are going to be the ones that repeat themselves on a constant basis, and they're the ones that actually work. So crazy as it sounds, those are the ones that I want to learn. I don't want to bother with anything else, right? So there's a, there's a big tendency for people to make the stock market a game, right? And I think that's it's just a bad thing to do because the stock market is about making money. It's not about being entertained. And I think that's one of the big issues that I see out there for people is they start looking at it as a game. The gambling gene kicks on, and then the indicator meltdown happens, and it's pretty much game over for them. There's no way for them to recover. So if you're familiar with candlesticks, I'm just going to quickly give you a real basic overview for a couple minutes. And if you're brand new to candlesticks, this will be a good introduction. Now, candlesticks allow us to measure price movement. And the candlesticks will work in any time frame. You can use it on a daily chart. You can use it on a weekly chart, i.e. swing trading, longer term. You can use it on an intraday chart. They work on 5-minute charts. They can work in any chart you want, right? Any time frame. And they also work in any asset class. And they work in any asset class on any time frame because we're looking at human emotions, right? This is one of the key things that you can look for. Now, when you look at a candlesticks, then we're going to focus on just the daily time frame for right now. You basically have these 4 points. You have the open of the day let's assume this is a stock. You have the close of that day of the stock. You have the high, and you have the low of that intraday. Okay, and of course you can have an up day or an up day, which would be this candle here, and you can have a down day, right, where the close is below the open. Now, what this does is it gives you this 4-point relationship between intraday or again within the candle, and it allows us to gain so much perspective on how investors are being positioned. Now, if you take this a step further, not only are candlesticks more visual than your say typical bar or line chart, what they really tell us is they give us the footprints, or again, like I said, the emotions or the sentiment of investors. And again, I want you to think about this. If you could have a tool, let's say, that consistently tells you when buyers are exhausted, when buyers are uber bullish and they can't get any more bullish, i.e. when there's no buyers left, or you could have an indicator that tells you when there's no more sellers left and the sellers are exhausted. Do you think you could make money with that? Who thinks you could make money with that? Because when there's no more buyers left, what does the market have to do? Right? Basically sideways or lower, more likely somewhat lower. If there's no more sellers left, if the last of the sellers have sold, what happens? The market probably has to bounce, right? Or at least go sideways. If you had a process and a tool to give you those crucial points in time in the market, do you think you could make money? Of course, the answer is yes. So beyond the fact that candlesticks just work, the formations that we're going to look at, they're very easy to spot because the reality is that most of us actually have an easier time learning stuff by looking at things through a series of pictures. It's the right side of the brain, right? So we're visual learners, most of us, about 80% of us actually, or have an easy time learning stuff by looking at it as a series of pictures. And that's the great thing about Candlesticks. It's very, very visual. So it's all about decision making without emotions. You have very defined risk and you have very clear stops. And the reason I chose this picture here is because this person here, if she goes beyond this point right here, her risk goes from 0 to 100% instantly, right? And it's the same thing with Candlesticks. We know exactly where to get out, right? So that's really nice about the Candlesticks. So having said this, let's go in and give you a little bit of perspective on what are the repeatable ones, the repeatable candlestick patterns, before we then look at the process and before we then go into the market rover to show you how simple it is to follow this process and find this repeatable pattern. Now, the candlestick pattern we're going to focus on here is called the hammer candle. And the hammer candle will give you this visual aid, basically, to tell you when a stock is overbought or oversold. Like, you don't need a phone call from Goldman Sachs or from Ray Dalio to tell you that the stock market's overbought or oversold. It's literally right there in front of you. Like, it's actually right there. And so the way it works is this. Imagine we had, let's use this one here, the number one. They're all the same, by the way. So use the number one. Let's assume you had a day or a number of days, maybe a few weeks, where a stock was dropping. Okay, and so the bears were in charge. They were selling the market lower. And let's assume then the market or the sellers came into this day and they pushed the stock lower one more time. They pushed it all the way down here. Well, something happened at that point and the market reversed all the way back up, so much so that by day's end, the market was closing at the very upper end of its daily trading range. Now, there's two ways to look at this. You could say, okay, like through the lens of financial television, oh, we're off the lows, Joe. Back to you. And that's correct. The market did rally off its lows. The trouble with that statement is that it's dramatically understating what actually happened. Because what really happened is that the sellers are basically exhausted. There's no more sellers left. How do we know that? Because the chart is telling it to us. It's right here. We can see it. When the sellers are exhausted, this is the point of maximum bearishness. When there's no more sellers left, the market has to at least go sideways or bounce. So we're constantly finding the point of maximum bearishness, right? If you could find the point of maximum bearishness and repeat it amount, do you think you could make money? Yes, of course you could. Another pattern we're going to look at here is called the engulfing candle pattern. And this pattern, very much like the hammer pattern, tells us very, very clearly with no guesswork whether the buyers are exhausted or the sellers are exhausted. So in this case, let's look at the example here on the left-hand side. And again, let's assume this was a stock and it was rallying for the past few days or weeks. The buyers were in charge and the market gaps higher, right? One more time, the buyers are bulled up and they're pushing the market higher one more time, but something happens. And what happens is that the market gives up all those gains, closes at the low end of the trading range, so much so that it fully engulfed, hence the name, the last candle or the previous few candles. Now, again, we could look at it through the lens of financial television and would say something, okay, we're off the highs, Joe, back to you. But the reality is that the buyers are exhausted. How do we know that? Well, because you can see the market reversed, right? After a few days of weeks of rallying, they tried very hard to push it higher one more time, but they failed. There was no more buyers left. The market reversed. So in this situation, with no more buyers left, the market has to at least go sideways, probably go at least somewhat lower. So I'm going to ask you, if you had a pattern and a process to repeatedly find these maximum points of bullishness and maximum point of bearishness, do you think you could make money? And by the way, again, like this works in stocks, it works in commodities, it works with anything. And this is the stuff I learned on my time on Wall Street and with hedge funds and now with my own company. This is the way the market actually works. So to show you how these patterns actually appear, this is directly from our Market Rover dashboard. We're going to go to the Market Rover dashboard shortly, but you can see, for example, here we had a bearish version of the patterns I just showed you, and you can see what happened. We get a red arrow, and as you can see, in this case, the stock dropped. Here we had a bullish version of the pattern I just showed you. You can see a green arrow, and of course the stock rallies, and then it gets overbought, which is this little red diamond shape. Next one. You can see here this bearish pattern shows up, right? And you can see the red arrow and the stock drops. Then it happens again here. Red arrow, which means you get the bearish version, and then same thing here, and again the stock drops. So sell, sell, sell. How about here in this stock? This is Comerica, ticker symbol CMA, for those of you guys that trade US stocks. Buy signal, the stock rallies. Red arrow, again, these are the patterns that I just showed you, that I just taught you for the past 20 minutes, and the stock drops. Sell arrow, and the stock drops, and it gets oversold, and the stock actually bounces, which is the green diamond shapes that show up there. So you can see the pattern repeats itself. And again, it repeats itself in any time frame. It repeats itself in any asset class. In fact, to be honest with you, I actually used this pattern for trading credit default swaps. I don't know if you guys know what credit default swaps are. Basically credit instruments when I was at JP Morgan and even after that. And you can see here a green arrow based on the bullish version of the signal, buy signal, sell signal, buy signal, sell signal. Okay. Another one here in Viacom, this is just recently. You can see a bearish version of this, sell signal, buy signal, beautiful seller exhaustion here. Again, you don't need 20 indicators and a phone call from Goldman Sachs to see that the stock is oversold here, right? We just programmed this into a repeatable manner on our dashboard, and then you get the green arrow for a buy signal, a sell signal here, and a sell signal here. You guys want to know how I created this pattern, by the way, and this whole process? I'll tell you quickly. Okay, good. I'll tell you. So I was working at JP Morgan, and my managing director was asking me to figure out a way to know whether bond yields are overbought or oversold in the near to intermediate term. And so we went into the lab, and I worked with a bunch of programmers, and ultimately we came up with this. We ended up using it for years, and I don't know, for all I know, they may still use it. And so this was a wonderful project and our clients really loved it. So then years later, I went ahead and I edited the whole thing quite a bit, along with my set of programmers, with my own company now, and we made it adjustable for other asset classes, and it's just an absolutely wonderful tool now. So just so you guys know, it's not something I just came up with sitting in my underwear somewhere. This is actually was developed while my time at JP Morgan. So now that we've talked about what it takes to cure indicator meltdown, and we've shown you this candlestick pattern, let's go through and let's actually put this all together, because this is usually where things stop for most people, is to have a pattern and an indicator and you know, happy days, let's go start making money. But then they get indicator meltdown because it doesn't work this way, right? You need a process. So what we're going to go through now over the next 15 minutes or so is going to be all about teaching you process. Now, like I said before at the beginning of the presentation, I think for most of you this will be brand new, because this is usually not being taught to the retail community. I don't know why, because this is how the stock market works, but I would urge you to pay attention right now. If maybe you stepped away, maybe you're having breakfast, maybe you're watching YouTube on another screen, please pay attention and come back to this right now. It's important. So we're going to talk about how to put all of this within a steadily repeatable process, which is the most important thing that I can teach you. So let's get back to this slide, and I promise you I would say this at least hopefully 10 times or so, and that's the following. And I hope you can maybe take a picture of the slide, maybe print it out, maybe you know, get a tattoo on your forearm of this. Is really important. Indicators, scanners, and trade alerts are only as good as the process they're used within. Repeat after me. Indicators, scanners, and trade alerts are only as good as the process they're used within. What does this mean in English? This means that if you are one of those people that just wants a shiny indicator that gives you a blue or a green or red arrow without process, you will not make money. Okay? I have to say this again because most people will fall for this. If you're looking for a shiny indicator or a trade alert without a process, you will not make money. You might go on a buying streak for a few days or a few weeks. Ultimately, you will fail. You need process. Okay, the stock market is not something beyond human comprehension, obviously, but it's also not as easy as some people like to make it seem. But the disconnect is that you need a process, and that's exactly what I'm going to help you. I'm going to put you on this bridge right now to go from having an indicator to actually having a process that actually works and to profitability. So before we go to that, let's talk a little bit about where money is being made. Any successful investor I've ever worked with, and I've worked with successful investors from around the world, Europe, US, Australia, rest of Asia, all the good ones, they have one thing in common, and that is they are looking for trend changes. Okay? They also ultimately turn into trend followers, but at the margin, they're looking for trend changes. Okay? This is where money is being made. Money is being made at the margin by detecting a move early. Now, this is important. It's not about front running these moves, right? It's not about jumping and taking a huge gamble on, a stock before it reports earnings and taking literally a lottery ticket. That's gambling. It's about detecting moves before they happen, or at least just as they start happening. Okay, so when trend changes happen, it becomes very, very clear. By the way, it's not hard, as I'll show you in a minute. So when a sector or a group of stocks, let's say, or even a currency or commodity starts to turn from, say, bearish to bullish or bullish to bearish, that's what we need to be able to detect. Who follows this so far? Give me a yes if this makes sense to you so far. Give me a yes. I want to make sure you guys are not falling asleep. Yeah? Okay, good. Can you guys see how this is a process you can actually make money with, right? So this is important. Excellent. Wonderful. Love it. Love it, love it, love it. Such a good crowd. So this is where money is being made. Now, where money is being lost is on the other side. If you miss a major turn in the market, like for example, I know for a fact a lot of people lost money when late last September into early October, they missed a major shift in the market from bullish to bearish. Likewise, a lot of people missed the move from bearish to bullish in late December, January, February, right? And they did it because there's no process. You can have the most amazing indicator in the world, but if you don't have a process, you cannot make money. All right? So again, I'm going to say this one more time. If you are one of those people that thinks there's a magical unicorn indicator you can buy or install, and that's all you need, you will not make money. I've been a trader investor for 21 years. That doesn't make me a better person. It just makes me for someone who's done this all my life. I can promise you, it doesn't exist. You need process. All right? Very, very, very important. All right. So this is important to understand before we go into the meat. Now, who in here has ever heard of something called sector and group rotation? Now, sector and group rotation is not just something I'm making up. This is actually how the market works. Now, we're talking about the stock market here specifically, but this concept works just as well in commodities and in currencies and definitely in fixed income. It works with anything. In fact, heck, I have some people who even use this process in cryptocurrencies, although don't get me going on that one. But they're using it there as well. Sector and group rotation. All right, this is how the stock market actually works. This sector and group rotation phenomena, let's call it a strategy, is something, and probably one of the only things that works in every market environment. It works in bull markets, bear markets, and sideways markets. Why? Because it's how the market works. So let me explain to you what's behind this. So the stock market is kind of like a race. You can see here, this is a picture of the Iowa Speedway, and you can see right now, you can see at the bottom left or right hand corner, car number 10 is in leading spot. Can you guys see that? Car number 10, right? So let's assume car number 10 represents technology stocks, right? Your Apples, your Googles, your whatevers, right? Those kind of names. Well, at some point, the technology stocks, i.e. car number 10, is going to start slipping. And another sector, let's say maybe the financials, right? Your banking stocks, your insurance stocks, maybe they start to rotate and they start to take over the first position. So let's assume financials are car number 9, the blue one with the Lucas sticker on it, right? And it starts going to the forefront. Now, this is where money is being made. It's the constant group and sector rotation. That's how the stock market works. And why does this exist? It exists because money is always looking for the best possible spot to make money, right? It's always looking for the best positioning. And I'm going to show you exactly, this is actually a current example. Financial stocks actually last week started going to, not quite the forefront, but they started going to really moving to the front of the pack with some good moves. And I'm going to show you guys this here in just a few minutes. All right? Does this make sense so far, guys? This is really, really important, sector and group rotation. Now, the way this works is like this. So you can see, for example, here, transportation stocks. They started having an explosive move. As the transportation stocks, as a group, started to move, they started to move because there was institutional sponsorship, right? And once that happens, you can go into individual stocks. Same thing here with financial stocks, right? When they start to move as a group, then you can start looking at individual stocks. And we're going to explore this here in much more detail over the next few slides, okay? Now, next question I have for you guys. I know I'm asking a lot of questions, but this is really important, all right? So, stocks are a very highly correlated asset class. Who in here has ever heard that stocks are highly correlated? The stock market. Type in yes. Yeah? Who has never heard that? Type in me if you've never heard that before. And it's totally fine. I'm not trying to expose you, by the way. I'm just trying to make sure you guys understand yourself whether you've heard this or not. Yeah? All right, good. Now, I'm going to tell you that once you understand this, so the next few slides are super important. Once you understand that the stock market is highly correlated, it's literally going to change the way you look at the markets. I promise you that. If you're willing to learn it, right? So if you're willing to actually make money in the market, listen to the next few slides. This is really, really crucial. And quite frankly, for a long time, I didn't understand. Probably for the first 5 years of trading, I didn't understand this because no one ever talked about it. But then once I started working on Wall Street and I started managing money and doing all that stuff, it became imperative. Otherwise, you literally can't make money, right? So this is really important. So stocks are a very highly correlated asset class. And what that means is this. If you have, look at the stock market. Let's assume the S&P 500 is up 1% on any given day. What do you think most stocks are doing that day? Are they going up or down? If the S&P is up 1%, what do you think most stocks, not every single stock, but between 70 and 80%, are probably not going lower, right? They're probably not totally falling apart, 70 or so %, right? Now, this correlation is even higher within any group of stocks. For example, and I'm going to show you guys real examples here in just a minute from just this past week, financial stocks, okay? They made a good move last week. Now, this is a sector of stocks, and the financial stocks rallied as a group. Again, not every single stock in the financial universe rallied, but most of them did. Most of them had some sort of a bid, right? Which is to say that if you don't take this group and sector rotation into account, you have a very small chance of making money on average, right? By definition, if you're going with the direction of sector and group rotation, right, you by definition would have a 70 to 80% chance of making money almost any stock you picked within that sector, right? Just going by the statistics. Conversely, if you picked a stock and you went against the trend of the sector and group, you would have to say you only have about a 20 to 30% chance, right? You guys understand that? And this is such a big deal because what I've noticed is that most people who don't make money in the market, which is most people, unfortunately, they are simply not playing the odds. What they're doing is they're taking gambling and lottery tickets. That's not making money, guys. That's gambling, right? You need to trade with the trend, with the sponsorship of the broad market. Mostly what that means, you have to trade with the direction of what institutional investors are doing because they are moving the market. So 8 out of 10 stocks are going to rise in any given bull trend. 8 out of 10 stocks will fall in any given bear trend. And 8 out of 10 stocks are going to chop back and forth in a sideways market. Right? And again, this holds particularly true with any given group of stocks, whether that's, say, a sector of stock or a group of stocks, right? You can say, for example, cybersecurity stocks, right? If they get a bid, most of them probably rally. Semiconductor stocks, like, for example, yesterday was not a good day for semiconductor stocks. Why? Because Intel wet the bed, right? So it's one of those things that's really, really important to understand. Now, 80% of portfolio returns can be explained by portfolio allocation. I'm going to promise you right now, this is something that ultimately made me a profitable trader once I understood this. It doesn't matter whether, on average, whether you buy Google or Apple, as long as you buy, in this case, large cap, growth tech stocks, right? It's more important what group of stocks or what asset class you allocate it to rather than which specific security you buy. Again, on average. And people, for some reason, most people are not willing to learn that. But if you learn that, you are literally, you go straight to profitability because you're finally playing with the odds. All right. Now that we've talked about all this, let's get into the really sexy stuff. And I'm going to show you guys right now how we actually use this process. We've talked about all the theory, okay? Because what we're going to do now, we're going to look at our Market Rover dashboard, which has this entire process built in. Literally 3 clicks of the mouse get you high probability trades. Nothing random, but just a pattern or something that someone came up with, literally within the process that the stock market actually works. So what we're going to do, we're going to now look at the Market Rover dashboard, which will tell us when any given group or sector of stocks goes bullish or bearish, right? And then based on that, within 1 click, we can then from there look at the individual stocks within any of those sectors and give us buy or sell signals with pop-up trade alerts. That sound good? Simple enough. Now, I'm not trying to make it overly simple, right? Because the mathematics behind all this is rather complicated, but we made it super simple for everyone to use. From retail investors to institutional investors, they're using this tool, and it's literally revolutionizing for a lot of people the way they look at their portfolio, right? So that's what we're going to talk about right now. So I'm going to come back to my favorite slide. I know you guys are probably sick of it already, but I want you to literally ingrain this in your head right now. Print this out, take a picture of it, print it out, frame it, whatever you need to do, make it your doormat. Indicators, scanners, and trade alerts are only as good as the process they're being used within. All right, now let's get to the good stuff. Let's talk about the Market Rover. What's the Market Rover all about? The Market Rover is all about getting you 3 mouse clicks to a highly profitable trade. But not oversimplifying or not promising you, pie in the sky kind of stuff, actually within a process that is actually how the stock market works and a process that the professional investors actually use. Not something I came up with in my underwear, something that actually works. All right, this is what the Market Rover looks like, and let's talk a little bit about what's behind this, okay? So, first of all, again, what it allows us to do is go straight into where the action is. In other words, where the sector and group rotation is. What we need to do, if you want to make money in the market, you need institutional sponsorship, right? An individual investor can't move a stock. I mean, unless it's a really big investor, which almost makes it an institution, right? You need institutional sponsorship, which means that's what moves the market. That's what moves sectors and groups of stocks. So I can tell you, last week, institutional investors bought financial stocks. Definitely, absolutely they did. And I'll show you guys that rotation here actually in just a minute. So you're going to be able to find the trade ideas for the first time, probably for most of you, within a repeatable process that is logical and it just reflects reality, right? It's not something where someone goes on CNBC and just blurts out a stock ticker because it's got a good pattern. No, there's an actual repeatable process behind this, and that's exactly why this works. No noise and nothing random. So it allows you to cut out the noise, whatever noise that is from whatever TV station or whatever newsletters you're getting. It's about looking at the market through the lens of a professional. By the way, the tool is web-based, so just so you guys know, if you guys have a question, we'll go into this a little bit more later, but basically the tool is web-based. There's no installation required. It works on your phones. It works on your smart tablet thingies. It works on your PCs, Macs, whatever. It works on anything, so just so you know, it's very, very simple. So let's quickly look at the Market Rover at a glance, and then we're going to start clicking around in it so you guys can see that this works and how it works. First of all, it's going to, like I said, allow you to really quickly get to the trade ideas, literally 3 clicks. It's got pop-up trade alerts, the daily trade of the day, commentary by me. It gives you the trend changes, like we said before, both in stocks and of course, the sectors and groups. And ultimately, we also include weekly coaching or weekly scanning webinars with this. So this is what it looks like. And the first thing we need to look at when we look at the Market Rover is the sector and group rotation. That's where everything happens, right? Most people pick a stock because it's got a good pattern, so they like management or whatever, but they totally ignore what's happening on a sector or industry level. I had dinner I had lunch actually earlier this week with one a colleague, and he's a private equity person, and we talked a lot about, what does it take to make money in private equity and stuff, and he said the most important thing is you have to focus on the industry. Which industry is doing well? He's not going to buy a company that's got a horrible industry. It's the same thing in the stock market, of course, in more near-term time frames, but it's the same thing, right? And if he also likes good management, which that's nice, of course, but it's the same thing. So we're talking about the same type of thing. So once we know which sectors and groups are going bullish or bearish, then what we're going to do is we're going to look for the actual buy and sell signals in stocks and ETFs, and they let the best of them actually pop up on your screen with an entry point, an initial profit target, and a stop loss. Okay, just so you guys know, it's literally all right there in your face. Now, one question you guys are probably asking yourself is, why is there 3 different time frames? Well, the market is divided up in 3 different time frames, meaning most of you guys probably want to focus on the short term. What does short term mean? Short term duration is a few days to a few weeks, okay? Short term is a few days to a few weeks. Medium term is a few weeks to a few months, and long term is usually a few quarters to a few years, all right? That's what the time frames are divided up in, is three different categories, I guess. So yeah, 3 different time frames, I guess, is the best way of putting it. So once we know that, once we see a change happening, so for example, and this is a screenshot, obviously this is not right now, we'll go into the live market Rover in a minute, but for example, when the technology sector at this point in time here turned short-term neutral, right, which means it was the day before it was short-term bullish, you then click on that, and then it'll give you all the ideas on the short side in the technology sector. Not because of a super fantastic pattern on a random stock, but because this is how the market works, right? This is actually truly how the stock market works. So let's go into this a little bit deeper. By the way, all trade ideas are tracked, so you can follow them on the market Rover as well. So let's go into it. By the way, it's all divided up in a simple 3-step process. So we first look at the broad market, tells you the direction of the broad market with the commentary. It tells you what each industry is doing in step number 2. And step number 3, it gives you the actionable buy and sell signals on the individual stocks. So very, very simple. Let's get into it. All right. Drum rolls, please. Bring up the Rover. Here we are. Okay. Now, just so you guys can see that, just so you guys can see, this is how it works. So you can see, for example, all the sectors and groups that we are currently tracking. We're about to add a ton more. But, for example, communication stocks, consumer discretionary stocks, and so on and so forth, right? And what's important, where we want to pay attention, is where the stock market, where a sector goes from, say, bullish to bearish or bearish to bullish. Now, yesterday, Friday, the 26th of April, we didn't really have any major changes, but we did 2 days prior. 2 days prior, the energy sector had gone from short-term bullish to short-term neutral. So here's how it works. When that happens, so every day, the sectors that have a change taking place on the short-term, medium, or long-term, mostly it's the short-term we're interested in, it's blue. It's super, super simple. So I'm going to show you, it's 3 clicks, right? Click number 1, we click on energy sector. And as I clicked here, it filters all the energy stocks down here. So every single energy stock in the energy sector is filtered in here. Now, the indicator, we have a couple of indicators embedded here. The indicator we want to look for is B2E or B2H. Those are those 2 patterns I showed you earlier, those 2 candlestick patterns. Now, as the energy sector went from short-term bullish to neutral, this was 2 days ago, right? So that's why it's no longer blue now, because it just happened 2 days ago. And of course, today's the market is closed, so I can't reopen the market for you. Unfortunately, if I could, that would be one hell of an effort. But let me show you an idea. So for example, Apache, all right? Apache gave us a sell signal. I'm going to click on Apache. That's click number 2, all right? And you can see that Apache, the stock, gave us an actionable sell signal here on the 24th of April. And you guys can go ahead and by all means open up your own charting platform, and you can see how the stock started going lower. Then it's dropped about 10% since then, right? So that trade alert will also pop up on your screen, right? This is not a hectic trading thing, by the way. This is all very, very, very process oriented. So you only have to open this once a day, or even less if you don't want to look at it more than once a day. No problem, right? So they actually pop up. It's right now the market's closed, so nothing's going to pop up. But I'll show you guys these other ones here in just a minute. So you can see how this Apache trade idea popped up again, not because it's got some beautiful magical pattern on its own, but because the energy sector as a group turned from short-term bullish to short-term neutral. Who thinks this is cool so far? Type in yes. Who thinks they can make money with something like this? Again, it's not because it's random or something that's just pattern or something fabulous that has no relationship to how this guys is how the stock market works. Okay, institutional investors understand this, which is why they make money. Not all of them, of course, right? They can have bad calls, but professional investors look at the market this way. All right. Now, if you wanted to say buy a put option in Apache when this trade alert happened, and again, you can see it's right here. You just buy a put or you buy a put spread. We talk about those in the weekly webinars every single week, right? Our students who took this trade, they made 10% very quickly. Right? The two students who bought a put option or a put spread, they made, I think it's like 450% or something like that. Right? So it's super simple. And this has only been clicked. I literally had 2 clicks. I made 2 clicks. This was 2 clicks. One click was to click on the sector that changed that day. The second click was in the stock. Right? Now there's a third click, and the third click is basically you can adjust the time frames because there's other signals. You guys think this is pretty cool? Yeah? Thank you. All right. Now, let me show you guys some other things. Now, for example, the financial sector, the XLF is the sector symbol, okay? It flipped from short-term neutral to short-term bullish a couple of weeks ago, okay? You can see it's short-term bullish, medium-term neutral, but it remains long-term bullish as well. But it's a short-term, which is the time frame of a few days to a few weeks. That's usually what people like to focus on, right? It's an amazing trend following tool as well, by the way, which is great. But you can see the financial sector, by the way, makes up 13 or 14% of the S&P 500, right? So I'm going to click again. Let's do the 3 clicks. Click number 1. I click on the XLF, right? I clicked on this. Click number 1. It's literally 3 clicks. 1 click on the XLF. I go down here. Every single stock in the financial sector of the S&P 500 is in here. Now I have 3 actionable buy signals that appeared yesterday. Actually, they appeared 2 days ago. Okay, one of them is Capital One. The other one is MTB. The third one is PFG. Let's click on the first one, top one, Capital One, COF. Okay, green arrow. It's a buy signal. It also was a pop-up trade alert. You can see it right here. It would have popped up here. Now the market's closed right now, and all you do is click on this. You can see the entry point, the initial profit target, and the initial stop loss. Right now, again, you could buy the stock, you could buy a call or a call spread. Very, very simple. That's why we do the weekly live market scanning sessions. And another one is MTB. This one literally just popped up on Friday. Actionable trade alerts. PFG, another one. Actionable trade alerts, and you can see it right here. Let me show you guys some other ones. For example, earlier, I think it was this week or last week, AXP, American Express, right here. Oh yeah, this is one we just talked about earlier, right? And by the way, every single day, I give people the trade of the day. Up here, I type in the best trades. I already actually just typed in the morning note for the coming Monday, so you guys can see it. I'm giving you guys a free preview. In fact, what I like is the beta reversals in those 3 stocks I just showed you. So I'm actually doing a live scanning session with you guys right now. Okay. So, and again, this is not because it's random. This is because money, institutional money, and I know this is institutional money because I talk to a lot of hedge fund institutions every single day, right? This is my world. So I know they've been buying financials last week. In fact, they've been buying financials for several weeks, right? Look at, for example, Bank of America. Now, this one didn't specifically give us a buy signal yet, but it's about to break out, right? And again, once you start to see this, so for example, look at the buy signals, the beta reversals. These are all buy signals right now. Can you guys see a bit of a rhythm? Financial. There's 3 financials and 6, and actually the rest of them are healthcare because healthcare is very oversold. So healthcare is seeing bounces. Who thinks they can make money with something like this? Yeah, I mean, it's super, and it literally is 3 clicks. In fact, most of the time it's even just 2 clicks. It doesn't get any easier than that. But it's not easy because it's overly simplified and doesn't work. It really, really works. What's the probability of a successful trade? How about 80 to 85%? 80 to 85%, based on a logical process, which is exactly how the stock market works. It's nothing random. It's nothing that just randomly came up with because I one day thought this might work. This really, really works. This is how the stock market works. Now, who remembers the ugly sell-off in healthcare stocks a week or 2 ago? You guys, anyone remember that? Healthcare stocks had an ugly dive a couple of weeks ago. You guys remember that? Who remembers that? Yeah, it's this one here. This is the healthcare sector. All right? Now, yeah, exactly, Medicare for all. That was, I think that's what spooked it. Now, let's go in. Let me show you guys the proof in the pudding that our members, our clients, they all made money from this, the people that took the trades. XLV, it remains short-term bearish. I think it's about to go short-term neutral and maybe even short-term bullish, just so you know. But it went short-term bearish 2 weeks ago. I clicked, again, 3 clicks. 1 click here, I click XLV, all the healthcare stocks come in here. Now, in the meantime, this is a week and a half ago, but I'm going to show you. So for example, we got a lovely sell signal in one of the biggest stocks in there in HCA. This is a hospital operator, right? Look at this sell signal. Again, I'm not making this up. I'm not drawing this in. Right here. You guys see this little red arrow on the screen there on the 12th of April? Okay. This was a pop-up trade alert. So as this happened, it didn't just happen because HCA had something randomly happening. It's because institutional investors were selling this stock, the sector or the group actually. All right. The pop-up trade alert came up here. It's in here somewhere. People made money, right? Now, what happened a few days later, the stock had oversold. So it showed, we have actually a couple other indicators in here so you can really grow with the market, Rover. We had another indicator in here that told us the stock was oversold, and of course it bounced. Another healthcare stock that I actually, these are trades that I actually personally did, so, and a lot of our clients did as well, of course. Regeneron, healthcare stock, it's a biotech stock as well. Same thing here. Again, on the same day when the healthcare sector turned bearish, Regeneron, red arrow, right, based on the pattern I showed you before. But the pattern in and of itself is not enough. You need to know what the sector and group are doing. You need that sponsorship from the institutions, right? The stock drops and we get an oversold signal. And then you take profit here and the stock in the sense bounce. Type in hallelujah or awesome if this makes sense to you. I shouldn't, hallelujah is stupid. Just type in awesome if this makes sense to you, right? Because it really, really works, guys. And it's literally 3 clicks. In fact, most of the time it's just 2 clicks. It doesn't get much easier than that. Yeah, great or good works as well, whatever the word is you want to type in. Anyway, I didn't want to make this too crazy. All right, so let's look at some other examples. Again, I just want to show you guys all week long, I've been telling people we're seeing rotation, we're seeing sector and group rotation into financials. I said it to people all week long up here in the commentary. So just so you guys see again, I'm going to click at financials here. I go down here, the XLF. And let me just see some of the other ones that we had just this week. I think it was like MTB. This is MTB, the bicycle. Yeah, this one's just Friday. We had like BBT. I think there's another one. I'm just ones I remember. BBT. Yeah, look at BBT. This one actually was one of the early movers because institutions have been rotating into financials actually a number of weeks ago, actually all through April. And this one was one of the first ones. And this stock is now, what, 10% higher since BBT? Right? Again, it's happening because this is how the market moves. Make sense? All right, a couple more examples, and then we're going to look at this. CME is another one. This also just gave us a buy signal just literally on Thursday, actually Wednesday after the close, or I think, yeah, Wednesday after the close. So anyway, who thinks they can make money with something like this? I know I've asked this a couple of times, so I want to see if there's more people now. Yeah, even more people. I got a lot of yeses earlier. Okay, perfect. Now, question is, how can you participate? How can you join the club here of those people that are using the stock market in this revolutionary, for the institutional investor? By the way, before I show you that real quickly, the Market Rover does work on all your mobile devices. It works on your laptops. It works on your smartphones. It works on your tablets. So if you want to have it on the go, it's not something you have to have open all day, not at all. I think most people have this open once a day to check for stuff, right? It's not something you have to have open all day long, even though the data does update every 5 minutes. But it's there and it works on the go as well. Yeah. So having said that, here's what clients are saying. For example, our client Steve, he said the market rover is the best market tool he has ever come across in years of searching, and it's really simplified a process to him that that in the past used to take him a very long time every single day to do. It takes him now, he says, 20 minutes. That's at most. I think it's probably more like 5 or 10 minutes for him to use it now because he's not gotten used to using the tool. So what are some of the highlights? Again, you get real-time pop-up trade ideas, not because of some random pattern or good management, whatever, because this is how the stock market works. Institutional sponsorship, sector, and group rotation. You get the trend scanners, you get the candlestick pattern, and there's a couple of other bonus indicators in here, including a day trading tool that you can use as well, a day trading indicator that's super, super high probability, 85%. That's included in here as well. If we have time, we can quickly touch on that a little bit later. So how can you get involved? So you can get the full dashboard, the scanner, the real-time pop-up trade alerts, and the daily best trade of the day, best ideas note by me personally. Again, it works on your desktops and smartphones, everything, web-based, no downloads, nothing to install. As a bonus, you get the Candlestick Bootcamp course. This is our best-selling course where people really learn how to use these high probability candlestick patterns, right? These are the patterns that will tell you when if emotions are either too bearish or too bullish, and all you have to do is do the other side of that. Okay. Also with this, you get the weekly coaching live market scanning sessions every single week, every Wednesday at 10 a.m. Eastern, 7 a.m. Pacific. This is about 3 p.m. London time if we have for our European clients. They're always recorded and always posted, so you never miss anything, you never miss a beat. We go to the market live. We give you the best trade ideas, the best stock ideas, best ETF ideas, the best option ideas, right? In addition to the daily commentary and the best trade ideas every single day. This offer is getting at 10 p.m. tonight, and you can get this for $4.97 per quarter. You can go to thesteadytrader.com/trade. thesteadytrader.com/trade. That's how you can get this. Okay, the offer is good until 10 p.m. tonight. So if you want to join an amazing community of people that really get it, that really make money, be inspired, be educated, and make money with a process that actually works, guys. This is nothing random. This is how the stock market works. This is how I manage money. This is how we did things when I was on the sell side as an investment banker. This is how we did things when I was with hedge funds and financial offices. And this is how I manage money now. So this is how you can get involved. If you want to get it, I would get it now because the offer does end at midnight tonight. Now, just quickly on the Ultimate Candlestick Bootcamp course, this is yours to keep. This is an on-demand video course, yours to keep. You're going to, again, learn this institutional three-pronged trading approach. You're going to learn how do you read these candlestick patterns. Nothing complicated. It's just how the market works. And you get lifetime access to this, so there is no it's not like it's limited to an amount of time that you can watch. This will always be there, and we actually do bonus webinars for that as well. So the next live weekly market scanning / coaching session is taking place next Wednesday. Again, this is every single week for owners of the Market Rover dashboard. Wednesday, May 1st at 10 a.m. Eastern and 7 a.m. Pacific. Again, that's 3 p.m. London time. You're going to come with all your questions. We're going to teach you, what the market's doing. We're going to give you the best ideas. Again, in addition to everything that the Market Rover does for you every single day, in addition to my best of breed ideas every single day that I give you in the commentary box, the next live session is next Wednesday. Again, you're going to get the full dashboard, the trade alerts, the best ideas note, which is the trade of the day. Again, this is for stocks, for options, for ETFs. We'll teach you exactly how to find options trades based on this. Again, it's literally 3 clicks to a high probability idea. I just showed you countless of examples today. If you would have just taken, let me just go back to this real quick. I want to just quickly flip back to this. So you go to thesteadytrader.com/trade. All right, just to quickly just show you one more thing here. If you would have taken this trade in, let's say, HCA, okay, this was literally 2 weeks ago. You had a beautiful trade boom, that stock drops hard, gets oversold. How about this trade in APA? This is literally from 2 days ago. It popped up in the trade idea. People, our clients who took this trade made really nice money. Oops, let me go back. Literally just in a couple of days, all right? And not because of something random, but because this is how the stock market works, right? If you want to trade futures, Wayne, this will work on, like, for example, the SPY, and you just follow then the signals of the SPY, right? For the day traders, there's an additional indicator in here. It's called the gap trading. Unfortunately, we don't have enough time now to go through this, but the gap strategy is unbelievably high probability. It tells you when a gap is likely to close or not close on any given day, and it works for all the stocks and ETFs and everything that's on the Market Rover dashboard. Sound good? All right. So if you want to get involved with this, again, I would highly encourage you to do it now before the offer ends at 10 p.m. tonight. How often do we get signals? Fred is asking. Well, the signals appear, depends on the day, of course, but you should at least get 2 a day. Now, again, you don't have to, and by the way, there's no time sensitivity really. Like if you get a signal, like in Apache for it, let's go back to this example here. Let me just quickly go back, and I'm going to make this a little bit smaller so we can have both things on the screen. All right. If you would have taken this signal in Apache here, right? It's not like something you have to, you have to run to your screen and do a trade. Not at all. You have time to enter these, right? Most of these trades are good even the next day to enter. So it's not at all something that, for the most part, is something that's right. Because when the sector and group rotation takes place, guys, when sector and group rotation takes place, that's when the money starts moving. These institutional investors don't move into a sector for one day, right? It's not how it works. So these trade signals are 80 to 85% profitable. And again, so for example, with the trade in Apache, our clients this week made, I think it was 450% in the options and 10% on the downside. It literally just this week, well, not even this week, just a couple of days ago, right? So so yeah, that's that. Yes. So in Jim is asking, or is it training for the other stuff? Yeah, of course. This is why we do the weekly webinars, Jim, and all you guys. Every single week, we do weekly webinars. Also, there is let me show you this. Also, there is this. In the Market Rover, there's the best practices video series that you have access to. Every single module and every single indicator in here is explained in detail in the videos, Jim. Right? So even that day trading one, the gap one, it's a super, super high probability trade. I have one of my analysts does that trade for me every single day. Yeah, you're still going to use your own broker. Who said this? Lath. This is not a broker. This is a process software, guys. Trade idea generation, investment idea generation. It simply works. Okay. Every single week we do the bonus webinars. Again, they take place at 10 a.m. Eastern, 7 a.m. Pacific. They're always recorded. That's at 3 p.m. London time for those of you guys in London. We go through, we live scanning. We talk about all the indicators, all the scanners, all the signals, give you the best ideas. And again, this is all in addition to my best trade idea that give you every single day inside the Market Rover up here on the live commentary box. Okay. I give you the best idea every single day. So who thinks they can make money? They can make money with this? Anyone? No. You enter the trade on your own broker. You get the trade idea here, and then you go and execute the trade. Right? So. For example, when you get this trade idea in APA, you go over to your broker and you do the trade over there. Okay? Okay. Getting a lot of yeses. Hell yeah. Yep. Absolutely. So guys, I'm going to tell you right now one last time. I know I promised you I said it at least 10 times. Scanners, indicators, and all those kind of things, they are only as good as the process they're being used within. If you are a person who's looking for a random, unicorn indicator that's going to make you money, you will not make money in the stock market. You will fail. You need a process. This tool is an accumulation of 21 years of trading and investing experience, my entire career, and it works. It absolutely works. The trade ideas are 85% profitable if you use it in conjunction with how the process works. All right? Excellent. If you trade options, not a problem. Most of our, or I shouldn't say most, but probably at least half execute these ideas using options, okay, which is awesome. And they just make, you know, and they're just even better. Okay, it doesn't matter whether you're a beginner or you're a professional, guys. We have literally hedge funds using this, but we also have people that have never traded before. I just spoke with one of my clients yesterday, a new client. He was, I think he's 55 years old. He just retired. He had never traded before, and he'd been using the tool for 2 weeks, and he's making money with it. Why? Because it's 2 clicks to a trade, right? So all you have to do is once you buy this, you log onto the website. Okay, you then click on where it says Market Rover. You click on this, and the Market Rover pops up. That's it. And it works on your desktop. It works on your smart devices and mobile devices, everything. It's right here. That's it. Simple as that. Okay? Who thinks they can make money with that? Yeah, it's all on the web. It's awesome. Cool. Well, listen, I've been yapping here for the past hour and 15 minutes. And you guys have probably heard about as much as you need to hear, I hope. Again, the offer ends at midnight tonight. It's $497 a quarter. The Candlestick course is yours to keep. And I very much look forward to seeing you guys at the next live market scanning session, which is, again, next Wednesday. You get there every single week. And yeah, look forward to see you guys. Yeah, it's per quarter, so it's 3 months you're obligated to. That's all. Cool. Well, listen, I'm going to toss it back to you, Jeanette. Thank you so much, guys. Have a wonderful rest of the weekend, I should say. And I'll see you guys next week.